The management of Union Bank now joins us to talk about what is the way forward for the bank, and Mr. Rai now joins us to take things forward. Mr. Rai, good morning. Thank you for joining us. Now, you've reported a loss of 3,369 crore for the quarter gone by. What has led to this loss?
This is basically we had to book higher provisions this quarter. We had a divergence on the provision side from the Reserve Bank of India risk-based supervision, that is about 2,280 crores. And these accounts, because the NPA dates are changed, basically they moved backwards, and because of that deterioration, the assets moved from D1 to D2, D2 to D3. Actually hit on the provisioning side on this account was 3,300 crores. So with these huge provisions, we had to book losses because we didn't have that kind of operating profit to absorb this kind of provision. But the redeeming feature is we had adequate capital to absorb these provisions.
So Q4 absolute gross NPAs were down by 20% quarter on quarter, but still remains elevated. How do you think the trend has been in Q4 for slippages, recoveries and write-off versus last quarter?
See, you need to note that our net NPA has moved to 6.85 levels, which is quite comfortable, and we are very confident by September we will go below 6%. That is one part. On the slippage side, our slippage for this quarter was 3,275 crores after taking 85 crores of slippage from one of the ILFS accounts, which is in the thermal power sector. So otherwise our slippages are very, very normal in the range of 2,300 crores, which is as per our projections. As we go forward, the slippage in the corporate side has definitely moderated, and the provisioning requirement on this side as we go forward will be very, very moderate.
Right. So, for the benefit of our viewers, could you share some numbers as to what is it that will be your stressed assets, including ILFS and the Reliance ADAG group? What kind of provisions are likely for stressed assets, and all of this for FY20?
Before coming to that, I missed one of your question on the recovery side. This is where we have done very well. Last year our recoveries and upgradation is more than 6,400 crores, which was less than 2,400 crores last year. So there is more than 180% jump in recovery and upgradation. Add to that the recovery from the written off account, which is about 700 crores. Our recovery in the last year, upgradation including, was more than 7,000 crores, which is a substantial growth. So we have done very well in that. So when it comes to the provisioning on the ILFS side, we have done the normal provision because which is required for a substandard assets. And the stress book actually on the SMA2 side also has come down. The SMA2 book is about 8,900 crores. Out of that, the corporate book is less than 2,500 crores.
Okay. And what about the deposit and credit growth? How's that been so far in the fourth quarter? And what really is the outlook going into FY22?
The credit growth for next year is projected to be between 9 and 11%. This year actually the domestic credit growth was around 7.8, but if you look at the global book, it was 3.7 because there was degrowth in our foreign branches, particularly because of the downward trend in the buyer's credit. But then 7.8% domestic credit growth was reasonably enough. And we have grown more than 15% on the retail book side. So this year we are hoping that we will have a double-digit growth.
What are the kind of slippages and recovery run rate expected for FY20?
Actually, these big three accounts, we expect a recovery of anything between 3,000 to 3,500 crores. Including that, next year we expect a recovery of total 9,000 crores. So that's what we have given a projection actually. So the provisioning requirements, the credit cost what we project is around 2.15, the projection what we have given. So that leaves us with a profit of ROA of almost 0.3 for the next year.
NIs have improved by about 18.7%. What's the margin picture been like in Q4, and is there any scope to improve margins in FY20?
Yeah, actually, if you see last year, our net interest margins have substantially improved to 2.23 from 2.07. So there is further scope. We have projected a NIM of 2.40 for this year. So this is basically happening by moderating our deposit cost. Our CASA has reached 36% level. There is definitely a reduction in cost of deposit, and at the same time with the better pricing and with better recoveries and all that, our yield on advance also is steadily improving. So we are looking forward for better margins during this year.
What are your capital needs for FY20? How will you meet your capital needs, and what is the government capital infusion? When is the government infusion expected?
Actually, we are going to the board today for discussing on the capital requirement. After that, we'll do the necessary disclosures. But as of now, we are comfortable with our capital. We are well above the regulatory requirements, and we don't foresee any heavy provisioning requirements also during the coming quarters. But yes, as we reach third quarter, fourth quarter, we may need some growth capital. We are making that enabling approvals. We are getting that enabling approval from the board. So when it comes close, we'll make the necessary disclosure. We may look forward some growth capital as we reach Q3, Q4, looking at the environment.
Right. There's also been, some cases of consolidation in PSU banks, and has there been discussion with the government on the probability of M&A?
The 12th February circular has given a very broad guideline to the banks that accounts about 2,000 crores should go to NCLT if the resolution is not done within 180 days. So this was a very generic, general kind of guideline. What Supreme Court said is Reserve Bank do not have power to give that kind of guideline. They can give only account specific guideline. So that's why there's the NCLT list 1, NCLT list 2, where the account specific guidelines were given that this account should be taken to NCLT. That is not squashed because RBI has the power to give that. But then RBI doesn't have the power to give some generic guideline like about 2,000 crores you take them to NCLT. That's what Supreme Court observed. So today nothing prevents me from taking those accounts to NCLT today. It is because since I took it based on that 12th February circular, they are questioning it. But then today I can take the same account to NCLT. There is no issue. I think there is no restriction on that.
Sure. Thanks so much for joining us on those earnings, Mr. Rai, and talking us through them.